Welcome to the Asia Trade. Major markets across Asia open right now. Of course, we've been watching President Joe Biden's press conference at the NATO summit, but we've been also watching the movements of the Japanese yen, especially after we heard that the Bank of Japan has just had a rate check on financial institutions about the level of the market. Take a look at that trading in action against the euro, because we already had speculation of potential foreign exchange intervention against the U.S. dollar as we saw that surge of more than 2% overnight. We heard from the Japanese chief currency official, Kanda, saying that the moves in the currency markets impact people's livelihoods. So a lot of speculation about potential intervention there as we continue to watch Japanese assets. And the Nikkei weighed right now by the strength of the yen overnight, which is really easing at this moment. Take a look at how the Kospi is trading as well. Of course, we have really watched some of those big moves in the Korean market. Given the ongoing strike in Samsung Electronics, the Kospi is also down 1%.
Yeah, take a look at what we're seeing when it comes to Australia. Of course, we ended that Thursday session just about 7 points away from that closing high that we last reached back in late March. We didn't quite get there. We are looking like extending those gains right now. So 79.48 is how the ASX 200 is trading at the moment. We're up about 0.8%. So taking a look at a closing basis, we could be setting a new record high for Australian equities. We're seeing a broad-based rally there. Again, real estate, even some of the tech shares, despite sort of paring back some of those gains that we saw in the previous session, are still faring quite well when it comes to losses of just about 0.4%. So slight weakness there, but we are seeing just essentially almost every sector there trading in the green. The Aussie dollar is sitting at 67.65. Of course, the moves that we've seen across Asian currencies traded against the greenback really depends on how these further inflation numbers and the pricing in, almost fully priced in expectations of a Fed rate cut in September, will weigh on the greenback. And we have heard from HSBC Securities talking about this idea that US exceptionalism, particularly when it comes to the currency, could actually continue to the end of 2025.
Yeah, and of course, we continue to watch the latest political developments in Washington. President Biden again downplaying concerns about his age and mental acuity, facing questions at a NATO summit media conference that focused almost entirely on the viability of his presidential campaign.
Fresh high-profile stumbles, of course, have kept the spotlight on his ability to take on Donald Trump. Our Bloomberg Political News Director, Jody Schneider, joins us now from Washington. And Jody, you know, we were talking a little bit earlier about how he tried to sort of fall back on his foreign policy. As one of our commentators mentioned, that's sort of a comfort spot for the president. But almost the entire focus, what people really wanted to get answers on, was his perception of competency and if he would move on if polling data suggested that perhaps his vice president would do better.
Yeah, and he didn't give us that, Heidi. He really seemed to stick to the script in terms of saying he will remain in the race. He doesn't think he needs to take cognitive tests, that he feels that he has command of the issues and that he's done a good job. That was basically his message. We did see a gaffe before the press conference. They had a lot of people talking where he mixed up the Ukrainian President Zelensky with the Russian President Vladimir Putin. He corrected himself, but then at the start of the press conference, he made a mistake in terms of saying that the vice president was Donald Trump, and he didn't correct himself then. So people were watching very closely for those stumbles. In the past, he's made a lot of stumbles. He's known for gaffes, but right now, with so much attention on his mental competence, and after that really disastrous performance in the debate just 2 weeks ago, any stumbles tonight were going to get a lot of attention.
So what's next for the president and his campaign?
Yeah, so he is doing some campaign events next week. It will be the Republicans' moment to shine at the Republican National Convention in Milwaukee. He's going to do a little counter-programming and do some campaign events in swing states. And traditionally, the other candidate from the other party doesn't do a lot during the convention of their opponent. But we will be seeing that. And the questions, though, continue to really swirl around the campaign. Today, we saw more members of Congress of his own party question whether he should be in the race, and others, including the former Speaker, Nancy Pelosi, with whom he's been close for decades, really leave open the question of whether she would support him or would rather support someone else. So it's really a time now where there really are a lot of questions whether he, can remain in the race or can remain without constant questions about whether he can do well in situations like press conferences, like being on the world stage. And could he, how would he do in another debate? That's a real question as well that many people have.
Our Bloomberg Political News Director Jody Schneider there joining us with really a wrap-up of what was an extended press conference and question and answer session that we heard from President Biden. Let's bring in for some analysis as we, of course, wrap up the NATO summit as well. Rose Gottemoeller is a lecturer at Stanford University. She previously served as the Deputy Secretary General at NATO. Really great to have you with us. We appreciate you sticking around after what was that lengthy press conference from President Biden. And we were talking a little bit earlier about the president really tried to make more of how this anniversary summit has been a success, the relationship he continues to have with NATO allies. Do you think the domestic political fixations at this point were a distraction to the event and the outcome, some of which, included very strident comments on China?
On the contrary, I think for NATO member states, they're probably thrilled that there's so much attention and interest in the NATO summit's final press conference. That doesn't usually happen. I'm being a bit flip to say that, but honestly, the NATO summits are quite a technical affair with the defense issues of the alliance front and center, and a lot of concern this time about assistance and aid to Ukraine, making sure Ukraine is on the pathway irreversibly to NATO membership and all the issues surrounding that, as well as the challenges of new technology. So it's not something that would normally, be at the top of the news feed. So I do think it was valuable from that perspective. And to be honest with you, I thought the president did a pretty good job delivering some tough messages to both Putin and Xi Jinping.
Right. It's interesting because you said ahead of this that this is kind of, a critical test of his foreign policy leadership, right? Do you think that he did well? Because certainly President Biden said, do you think there's anyone else that could have done a better job? Do you think that this summit could have gone better, right? He certainly thinks so.
Well, the U.S. president is always the leader of the free world, of course, but also is looked upon as the leader of the superpower. And so I think everybody's going to be watching this press conference very, very closely. And I welcome the fact that he had such a strong message for Vladimir Putin saying, I'd talk to Vladimir Putin once he changes his behavior and drops his aggressive stance to Ukraine. So I thought that was a strong message, an important message. And as far as Xi Jinping was concerned, there were tough words in the NATO communique about China enabling Russia, and apparently the Chinese have really gone off like a firecracker over this and been very concerned. But he said, look, I have a line of communication open now to Xi Jinping, and we can solve problems, and we will solve problems going forward. So I thought that nuance was very interesting, despite the pretty tough NATO summit communique.
Rose, in fact, take a listen to what President Biden said on China.
We have to make sure that she understands there's a price to pay for undercutting both the Pacific Basin as well as Europe, and as it relates to Russia and dealing with Ukraine.
As you said, that declaration pretty strong coming against China. But I wonder what a potential Trump White House would actually mean for NATO's relationship with China as well. We've heard from President Biden saying that U.S. allies told him another Trump presidency would be, quote, a disaster.
Well, it's hard to tell about the Trump presidency, should it come, what it would mean for NATO overall. With regard to China, as the U.S. administration, both Republicans and Democrats have been keen to pivot military attention, defense policy attention to Asia. And I've understood that those around Trump are keen to continue that pivot. And essentially they say NATO in Europe can fend for itself. That's part of their whole theme about NATO, that it's time that the NATO allies in Europe and Canada stand up for themselves, fend for themselves. We got to go deal with China. So I do think there could be rather more of that kind of emphasis in a Trump administration rather than what we see now. And that was the message of having the 4 Indo-Pacific allies of the United States also present at the NATO European Ally Summit. That is to say, these are allies and partners who work closely together in a cooperative way, bolstering security both east and west. NATO, of course, is not going to come to the Indo-Pacific. It's the North Atlantic Treaty Organization. That's where its defense and deterrence work must center itself. But for the allies and partners to be working together, especially when we have the challenges of new warfare techniques and technologies emerging, and everything we've been seeing in the war in Ukraine shows us that there are new directions out there. And by the way, NATO put a lot of emphasis this time on innovation and technology in the defense space and what it's going to mean for us as NATO allies and for the allies in Asia as well.
Rose Gottemoeller, really good to have you with us, lecturer at Stanford University. Thank you so much for sticking around. We have more ahead on the Asia trade. This is Bloomberg.
Taking a look at dollar-yen trading at the moment as well as yen-euro, we've seen some pretty erratic swings for dollar-yen in the early Friday business trading. We have seen that media report saying that the BOJ conducted a rate check on the yen. Both dollar and euro, though, which kind of ups the ante when it comes to investor risk point of view, right? We'll be watching for that intraday low at 157.44 and potentially some position cutting when it comes to euro-yen as well. Let's bring in Adarsh Sinha, who's a co-head of Asia FX and Rate Strategy at BofA Securities. Adarsh, I will start off with what we've seen in the yen, and this is sort of, I guess, a step before intervention. And the last time we actually saw some level of intervention was also before a long weekend as well. What do you think is happening here, and also sort of odd timing to do that as we had, that really good CPI report from the US?
Yeah, I mean, you're right. It's odd timing, but it's actually, it's kind of the right timing. If you think about the efficiency of FX intervention, sort of going with the trend in the market, having the surprise of the data supporting the intervention, actually makes a lot of sense. And it's a bit different from the intervention we saw in April and May. So in some sense, I think it's kind of the right thing to do. Now, the question for the market at this point is, now that they've shown their hand, now that they've intervened, they kind of have to continue to intervene just to maintain the credibility of that intervention. But the problem for the yen, as many people know now, is that the supply-demand balance for the Japanese yen is quite negative. You have a lot of structural outflows happening from corporates, from households, that are the primary reason the yen is so weak. So when we survey our clients and we ask them, do you think FX intervention by the Ministry of Finance will be effective? The majority continue to say they don't think it'll be effective. So it's still a tough task for the Ministry of Finance and the BOJ. I think what people will be watching for now is what was the size of the intervention. I think today the Bank of Japan will publish its daily projections of balances with financial institutions, which is always used as kind of a guesstimate for how much they might have intervened and what the effectiveness of that intervention was.
Right. So if everybody says that probably the effectiveness will be limited, then why do it?
It's a fair question. I think the reason they did it last night is not so much because of dollar yen. I mean, dollar yen had been quite stable, but it was more cross yen. The yen has been weakening to new lows versus the likes of the euro, the pound, and so forth. And that's why I think the news we got this morning that there was a rate check of the Japanese yen versus the euro kind of makes sense. So, they have intervened. I think usually the purpose of intervention for developed market central banks is to reduce volatility rather than target specific levels. And we had seen pretty big moves in the yen versus non-dollar currencies. So that probably explains why they've come in and intervened.
And so much of it goes down also to what we see for the dollar, right? Does this decline that we see, is it a meaningful kind of change to the trajectory? Or do you see, even with slowing inflation, even with, a September cut being priced in, that the yield and the growth gap compared to other economies is still going to continue playing out to the US's favour?
Yeah, I think especially when you think about Asian currencies, where not just the Japanese yen, but the CNY, the Taiwan dollar, a lot of these are still meaningful low yielders versus the US dollar. So, getting, as you say, getting like, 2 or 3 rate cuts doesn't change that rate gap or doesn't change the carry pressure on some of these currencies. So I think, if I look at my year-end forecast for dollar yen, we have it at 158, which is basically where we are right now. So yes, you can have a situation where dollar yen goes above 160, eventually comes down when the Fed starts cutting rates. But for the likes of dollar yen and even dollar CNH, we do expect both of them to remain elevated compared to historical levels. So dollar CNH probably get to 740, dollar yen will stay close to 160 even by year end.
Adarsh, as we continue to watch these moves on the Japanese yen and speculation of potential intervention, we kept hearing from the chief currency official, Masato Kanda. And he's been such a charismatic presence in the markets, right? We of course, are now waiting for Atsushi Mimura to take over. Will that make a difference? Because we know that this is a government official. Will he have the sort of same charisma and sway on the markets?
I mean, ultimately, we'll wait and see. Ultimately, I don't think it should make too much of a difference because the strategy will remain similar, and the strategy is of what I call constructive ambiguity, which is, you don't want to tell the market exactly when you've intervened, how much you've intervened. You want to keep uncertainty high. And importantly for dollar yen, you want to keep volatility high. Keep in mind, being long US dollars versus the Japanese yen is a carry trade. And the way you deter people from doing that carry trade is you keep uncertainty and volatility high. So hopefully the new currency chief will maintain that strategy. Might not be enough for the yen to strengthen a lot, but at the very least it can keep dollar yen stable for a little while.
We've spent most of this morning kind of mired into the debate over the competence for President Biden to seek re-election, right? Is it time for FX investors and traders to start assigning a bit more political and geopolitical risk?
Good question. Again, we do a monthly survey where we ask people, how are you trading the U.S. election in rates and FX markets? And up until now, most people say we're not trading the U.S. election. Obviously, we're focused on it. We're looking at the headlines. We're looking at the news. But we're not really trading it. And usually, I think you need to be kind of within 2 months of the election for the people to really start to put on trades. We are seeing risk premium in the volatility market. So the volatility curve in FX and rates is very steep around the election. So there's some risk premium there. And the final thing I'd say, generally, there seems to be this perception that if there's a higher probability of a Trump victory, which is what we've kind of been seeing in some of the prediction and betting markets, then the US dollar should benefit from that because you have higher tariffs, you have less immigration, you have potentially higher US interest rates, and all of that is a US dollar positive mix. What I'd say there is, it's not that clear yet because alongside all this rhetoric around tariffs, there's also some rhetoric or expectation that a Trump administration might pursue a weak US dollar policy. So how does that mix play out? It's far from clear. And I think extrapolating what happened in 2018-19 when tariffs went up and the dollar strengthened and the renminbi weakened is, it's not that clear that history will repeat itself.
Adarsh Sinha, good to have you with us, co-head of Asia FX and Rate Strategy at Bank of America Securities, at a very crucial moment, of course, as we continue to watch those really wild swings on the Japanese yen. We have now reports that the BOJ has performed a rate check on financial institutions when it comes to the yen against the euro. We had speculation of FX intervention already overnight, given that huge surge in the Japanese yen, more than 2% overnight against the US dollar. But Haidi, really, those gains on the yen, even now, not really maintained.
Yeah, and I think that was, to your question, which is a very fair point. Every time we see the bouts of intervention or suspected intervention or pre-intervention, the question is, the efficiency versus the cost, right? Why do they keep doing it and why the timing just after softer than expected US CPI? So, but really also quite interesting, the expectation seems to be that we will continue to see, that dollar exceptionalism, even with a couple of cuts now kind of priced in.
Because we had a little bit of strength in the offshore yuan as well. That's not being sustained. Do stay with us because we have the China trade numbers also coming up today. The China Show is next. This is Bloomberg.